Today is on around 25th of May, so it's about a month old now. But some of them might be a little bit old, but I thought like I would share some of the insights that you might get, because these are some of the analysis from Q1 that might be interesting to you. So first of all, in the report, it's a 55-page report. We went through basically the crypto stock market overview, and this was basically data from Q1 from January to 31st of March. Market was pretty volatile in Q1. Started out the year pretty well. I started the year up to around mid-February, and then market sort of crashed on Black Thursday on the 12th of March, where it went down 40%, and after that it sort of recovered. All in all, it only lost about 5% in Q1, but we know by now in May that market sort of fully recovered back to its February level, where Bitcoin is now about $9,000 as it is. In terms of the top 5 coins, I think the big winner in Q1 was BSV, Bitcoin SV. My team calls it a big surprise victory. On average, it went up by 12%. Bitcoin saw 11% decline, but we know by now that it's recovered fully. Bitcoin SV was the biggest gainer at 70%. So in terms of dominance, Bitcoin is the coin that has the largest market cap dominance. Overall, it lost 3.5% in Q1. Ethereum is the second largest coin in terms of dominance, followed by XRP, Tether, Bitcoin Cash, Bitcoin SV, Litecoin, and the others. Of course, we know by now, about yesterday or so, Tether has sort of overtook XRP as the third largest coin by market cap, and this was a big thing. So it's a trend that we've been observing, a stablecoin trend, which I'll look into it deeper, and where there's been a lot of printing of stablecoins lately. In terms of top 30 coins overview, in terms of in Q1, so I talked briefly that Bitcoin SV was the biggest gainer. The second biggest gainer was OKB, which is the exchange token by OKX, and followed by Dash, which is very popular in Venezuela. But in terms of the coin that has the biggest loser, Cosmos was the biggest loser. It went down 54% in Q1. This was mainly because it suffered departure of multiple high-profile team members. So its co-founder Joey Kwan and Zaki Manian, they both fought each other pretty intensely publicly, and this sort of was the downfall of Cosmos, because everyone sort of lost confidence in it. And typically the biggest reason for startup failure is arguments between co-founders, and we are seeing it happening for Cosmos. Makers suffered pretty badly as well in Q1, went down 33%, mainly because of the Black Thursday event affecting Maker. OKB did well because most likely because of OKX launch of OKChain testnet, as well as they made a big announcement to burn 700 million OKB, which were yet to be issued. So this was sort of a trend that happened in among all the exchange tokens, where a lot of exchanges, especially Chinese-based exchanges, started burning tokens that have not been issued. Everyone started following Fcoin and sort of moved the price up for the exchange tokens. Yeah, so in terms of stablecoins, in Q1, we saw a 32% increase in stablecoin supply in Q1. This was roughly about $1.8 billion US. We know by now in May that stablecoins has increased further, and Tether has been printing a lot and is now overtook XRP as the third largest coin by market cap. I've talked to a lot of stablecoin OTC players. Stablecoin business has been really well, and everyone's really interested in printing more stablecoins. In terms of stablecoin dominance, Tether by market cap or circulation has the largest circulation. It's about 85% of all stablecoins that have been issued. USDC has been gaining share, 9.2%, but it's still relatively small compared to Tether. Everyone else is relatively small. Paxos, 3.3%, TUSD, 1.8%, DAI is at 1.3%. I think the biggest point to note here is that Gemini USD is no longer the top 5 stablecoin. It started out really well, but it's sort of like kind of died off as a reliable stablecoin this day, because not many people are using it. In terms of trading volume, Tether, even though it has only 85% of market cap or circulation of stablecoin, it basically dominates all exchanges trading volume. It has 94% of all trading volume. USDC has about 1.7%, and everyone else is about 1%. DAI is smaller at 0.04. And these are the top 5 stablecoins. Everyone else is relatively much smaller than these. Yep. So this is another chart. So you see from here that in terms of circulation of market cap, Tether has got 85%. You see that this whole thing in green and everything else is really small that we have to expand it out. And during the Black Thursday event, DICE market cap dominance, if you see over here in yellow, it actually had a significant decrease during the Black Thursday. DAI, of course, as you know, was struggling to hold its peg during the Black Thursday event. So I'll look now into the derivatives market. So in terms of the crypto derivatives market, so this is the Bitcoin perpetual swap, which is traditionally a product invented by the Arthur Hayes of BitMEX. What we saw was that Binance Futures has actually sort of overtaken BitMEX as the leader in terms of trading volume. It's got 38% of all trading volume for Bitcoin perpetual swap. BitMEX has only 33%. It went down by 7.5% in Q1. Binance went up by 15%. Bybit was the third largest Bitcoin perpetual, followed by OKX, FTX, and Deribit. As you can see there on Black Thursday on the 12th of March, there's huge increase in trading volume for Bitcoin perpetuals during this day. So yeah, in terms of open interest, BitMEX is still leading, but Binance and FTX is fast catching up. So in terms of open interest, BitMEX is 47% of the Bitcoin perpetual market. It's down 10%. It used to be significantly larger. Binance is gaining share, 18%, 8.4% gain, followed by Bybit, FTX, OKX. So FTX gained 7.4%. You see on this open interest chart on the 12th of March, after the Black Thursday, a lot of contracts were closed, and there was a huge dip, very significant dip in terms of open interest over here. So I think the point I'm trying to make here is that in terms of the derivatives market, BitMEX used to be the largest exchange for derivatives, but I think it's seeing a very strong challenge by Binance Futures team, and also FTX is catching up as well. This is another chart showing the open interest. You will see that it's trading roughly around $1.5 billion, going up to around $2 billion in open interest somewhere in middle of February. And then on Black Thursday, it went down almost by half to less than $1 billion in open interest. BitMEX saw its biggest decline in open interest, close to $384 million. Binance saw its open interest increase, actually 32 million, same as FTX saw $62 million increase in open interest. Everyone else saw a decrease in it. So for the explanation over here, which shows that everyone's open interest sort of decreased 77%, except FTX, which saw an increase in open interest on the 12th of March day itself. So for those of you who don't know what open interest is, it's basically a total number of active derivative contracts held by market participants. And basically, when a trader's position has to be closed due to lack of margin to cover the position, this is a liquidation event. And basically, what happens is the contract is forced closed and the open interest is reduced. So let's look a little bit into the crypto exchanges market, and I'll start with the spot volume here. We logged into derivatives earlier. So in terms of the spot exchange market, this is a problem for all exchanges. A lot of exchanges are known to be faking their trading volume. No one knows for sure who is trading real and who is not trading real volume. In a traditional market, where exchanges are regulated, exchanges cannot fake their volume because everything is subjected to regulation. But this is crypto world where a lot of exchanges are not regulated, so they can technically do whatever they want to in their trading engines. What we found was that a lot of exchanges started faking their volume, and they just do crazy amount to give the perception that they are the most liquid and best exchange to trade in. What we found was this was the Bitwise top. What we did was to get a sense of the real top 10 real exchange volume. Bitwise basically did Bitwise collected 10 exchanges that has detained the real volume. And in this case, it's Itbit, Poloniex, Gemini, Bitflyer, Bittrex, Bitfinex, Bitstamp, Kraken, Coinbase, and Binance. Of course, this was done back in 2019. And what we did was we took the real volume, the volume from all these exchanges and kind of stacked them up together to see. What we saw was that market trading volume for these exchanges have been pretty much creeping up throughout Q1. And there was a huge peak on 11 and 12 and 13 of March. And we can't fit this onto the chart. It's way above this chart. It's close to $8 to $10 billion on both of these days. So yeah, one of the things that we saw was that by far Binance has the largest trading volume, and it has close to 50 to 75% of real spot trading volume over here, and it supports the view that Binance is the most liquid exchange. Yeah. So we also took a look at the web traffic analysis to see which exchanges have like the largest web traffic, to see who has the biggest market share. We use SimilarWeb, and we look at data for the past 3 months, basically January, February, and March. We kind of took the top 20 exchanges based on CoinGecko's trust score, which is basically a metric which we use to determine which is the best exchange in terms of liquidity, web traffic, and so on. What we saw was that Binance has the largest web traffic. It has close to 30% of all web traffic among the top 20 exchanges. BitMEX is the second largest one, about 15%. Bitum, Coinbase, Upbit is around 6%. BitMEX, as you know, is a derivative exchange. Binance is a spot and derivative exchange. What is interesting is to note that it is basically close to 4 times larger. It gets 4 times more traffic than Bitum, Coinbase, or Upbit combined by itself. And even if you combine them, they still have less traffic than Binance. Coinbase is an interesting one because not too long ago, 1 year ago, it has close to similar traffic than Binance, but up to now, like they are just 1/4 of Binance's traffic. And we also look at the crypto exchange tokens. One of the things that we observed in Q1 was that the average returns for these top 7 exchange tokens was 25%. It did relatively well compared to the other tokens. The biggest gainer was KNC, Kyber Network Crystal, which gained 136%. This line in yellow, you'll see at one point, sometime in early March, it went up to close to 300% before it crashed during the Black Thursday event. OKB did very well as well, up 64%. 4B token did 20%. Both of these was mainly driven by token burns from both of these exchanges. They're all following Fcoin, which is a now defunct Chinese exchange, with sort of in a last-ditch effort to prop up the price or to gain back some popularity, sort of burn a huge amount of treasury tokens, and the price went up. And then all the exchanges like OK, 4B, and I think ZagB follow and burn their tokens as well to pump up the price as well. Yeah, it had a significant gain. Blue color was OKB at 150%. It saw recover, ended the quarter at 64%, which was doing pretty well. I think the only thing that didn't do too well was Binance at 8.1%. This is not really surprising. I think it had a good gain throughout the year, but before this as well. Yeah, so in terms of this report, we also look at some of the traditional markets and compare it with the crypto markets. So one of the things is over a 1 year period, the biggest gainers from January 2019 up to March 2020 was Bitcoin. Bitcoin did relatively well, 56% gain. Gold did pretty well as well, 24%. I think during this period, Ether went down 7%, S&P fell 10%, and crude oil, as you know, went down 67%. This was before it went negative in Q2, but it was pretty bad already as it is in Q1. Every asset class had initial gains at the start of Q1, but fell as COVID-19 panic hits the market. So from 19 February onwards, crude oil fell by 25%, and S&P fell down 10%. Bitcoin and Ether went down 40 and 45%, respectively, during intraday trading on the 12th and 13th of March. This was an insane decrease in prices, we all know. So although Bitcoin crashed by over 40% on 12th of March, it only declined 11% in Q1 2020. So mainly this was buffered by the huge increase in price in January, February, before the decrease after that, causing it to lose 11% Q1 quarter on quarter. Q1 last year was pretty well for Bitcoin. It gained 6.2%, but yeah, it fell 11% this year. But if you think Bitcoin fall about 11% is bad, it's not as bad compared to S&P, which went down 20%, and oil, which went down 67%. We all know by now that Bitcoin has basically regained back all its position that has lost since the Black Thursday event. S&P is testing its peak again, but it's nowhere near what it was before the crash. We also look into the correlation between gold and asset prices. So gold is basically known as a safe haven asset during major financial crises. However, what we found was that during the current COVID-19 drop, it's not really a good, not really a good safe haven. So for example, during the great financial crisis in 2007, the red line is gold, the blue line is S&P. You see a very clear inverse correlation when S&P went down, gold went up. The same for 2011. There's a decrease in S&P and an increase in gold. Same again for 2015, 2018. But one thing that was different was that in 2020, when S&P went down, gold actually went down together as well. So you see previously the correlation was negative for most of them. But for this time, it has a positive 0.5 correlation with the pandemic. So yeah, basically it has a short-term negative correlation, but this is the only time where it showed a positive correlation. This was maybe most likely because gold was sold off to meet margin calls on other leverage products, leverage positions. And but it's also worth noting that if you look at a long trend from 2016 up to 2020, generally gold has a positive long-term relationship with S&P 500. So if you remove like the crisis period, like when the stock market crashes, gold generally goes up together with the S&P 500. So over here it says the gold S&P 500 has a 5 years correlation of 0.7, which is very closely correlated. And it's still a positive correlation even when we look at 1 and 2 years time horizon. So a lot of people maintains that Bitcoin has a positive correlation with gold. So we did a Twitter poll on Twitter, and what we found was that 63% of respondents believe that Bitcoin is a safe haven. And we wanted to know if this is actually the case. So we ran some numbers, and what we found was that Bitcoin actually has a positive correlation with gold. A correlation between Bitcoin and gold in the 5 years period is a correlation of 0.6, and a 2 years period has a correlation of 0.4. So it shows that Bitcoin does have to some extent a positive correlation in gold with gold. That's why a lot of people sort of have this belief that Bitcoin is a safe haven. And I guess it depends on where you are actually. If you live in a country where there's a lot of pretty bad currencies like that, where the currency that the government uses is always depreciating or it has very high inflation. It could be like countries like Argentina, Turkey, South Africa. People might think that holding on to Bitcoin might actually be the better option than holding on to the national currency. And that's why people think that it sort of have similar properties with gold in the sense that, but it's just easy to transport around when we move around. One of the things is we did as well look into the market. Bitcoin fell by 37% while gold remained as a safe haven, falling by only 1%. So maybe this suggests a decoupling between the two assets. So you see that gold in 2020 fell down by 0.9%, but Bitcoin at this point in time fell down 36%. But we know by now that Bitcoin has pretty much recovered to its level. If you extend this chart, it's probably back to 0% or slightly above now. So it's sort of fully recovered from its crash, but the huge decline in value during the Black Thursday when it's not a good store value for those who has weekends. So yeah, I think we also look into the oil markets just to see what things look like. What we saw was that Bitcoin has a short-term correlation with crude oil, but they're hardly correlated in the long term. So in the long term, yeah, 0.9. So it's probably a coincidence that the ICO bubble and oil being expansion in 2017, 2018. If you take off the ICO bubble, there's no strong correlation between two assets when we look at the past 1 and 2 years. Yeah, I think the rest of the world during Q1 was all in red except Ethereum, which gained 1.4%. Every other stock market in the world had a negative decline. If you want to put it that way, Q1 was negative 11% for Bitcoin. Everyone else had like Russia went down 35%, US Dow Jones 21%, UK FTSE went up by 25%, and so on. So the final section that I talk about today would be on decentralized finance, DeFi. So this is an interesting topic and something that CoinGecko is really interested in. So one of the things is we started noticing a huge trend of people getting involved in DeFi, and one of the things that's interesting in this industry is that it's so new that not many people have gained insights into the space. So we wanted to find out who are the people using DeFi, what are they like, what are they thinking, what are the popular products in the space, and we conducted a survey. Basically during March, before we produced this report. We interviewed close to 700 people, and here are the results. So 694 participants to be exact, and distributed them throughout our various medium on our newsletter, our Twitter, Telegram, Instagram, Facebook, LinkedIn. What we found was that 89% of respondents have heard of DeFi at least once in the past 3 months. So this is a very good thing. Most people have heard of DeFi, but whether they use it or not is a different thing. We should look into it deeper. But I think DeFi, one of the insights that we found was that DeFi has a major gender gap issue. So 89% of all respondents are basically male, or basically signifies that most people who have heard of DeFi or know about DeFi are male. Only 9% are female. So we know that DeFi or crypto or blockchain is generally a very male-dominated industry. This is not surprising because the finance industry is generally very male-dominated. If you look at Wall Street, a lot of traders are male. If you look at the tech industry, it's a very male-dominated industry as well. Most programmers are male. Combining tech and finance together into the fintech industry or blockchain space, which is part of fintech, you also get a very male-dominated industry. But I think what was surprising to us in CoinGecko when we did this survey was that the scale of this gender imbalance. So we knew that there would be more males, but probably around 70% male, roughly. But what surprised us was 90% of people in DeFi are males instead, and only 9% of them are female. So I think this is a major problem for DeFi, and if DeFi wants to grow further, it needs to find a way to attract more females and make the products easier and more interesting for females to make use of. Otherwise, it will never get beyond its general young male audience. The other thing that we did was, in terms of the gender survey, we saw that the biggest percentage are basically the Gen Y or millennials, between 20 and 29 years old, and between 30 and 39 years old. So these are the two gap, which combined, which is about 70% of the users. 24% are those aged above between 40 and 59. Small segment of people aged between 16 and 19 years old. So if you look at it, it's basically a very male between 20 and 39 years old, and DeFi industry needs to do something to move out beyond that demographic. One of the things that we did was we asked them as well, have you traded in the past 3 months? 92% of them said yes. Have they heard of DeFi? 90% of them said they heard of DeFi before. So if you look at this chart, never heard of it, but don't know what it is, know about it. So if you combine these, those who have traded recently, 90% of those who have traded recently said they have heard of DeFi. And one of the things that we asked them as well is, do you own at least one stablecoin? And those that said they've traded said that yes, they own at least one stablecoin. 67%, 1/3 of them said they don't own any stablecoin. Yeah, maybe these guys are using it to hedge against inflation or to use their rent, pay rent or whatever. One surprising insight, which is our second insight from the survey, we have 4 main insights, is that the top 5 stablecoins owned by people are basically similar to the market cap ranks of this stablecoin. So the biggest stablecoin basically is Tether, followed by USDC, True USD, Paxos Standard, and DAI. But this survey was interesting in the sense that what we found was that ownership from our respondents is That's a huge difference for DAI. So a lot of people said they own Tether, which is not surprising because it's the largest by far. But DAI, 50% of respondents said they own DAI, which is surprising because DAI is on the fifth most popular market cap. This is followed by USDC, TUSD, and Paxos. So I think that was the second biggest insight for us. DAI is actually quite a popular stablecoin, especially among the DeFi folks. And even though it's got the smallest market cap rank, it's got pretty much popularity among the mass audience. This probably suggests that it's got a wider spread, and the other USDC, True USD, Paxos is probably used by more institutional guys, less people, but larger volumes, I would say. Our third question as well is we asked these guys if any of them have heard of these DeFi products. So there's 9 major DeFi categories, such as decentralized exchanges, wallet, decentralized lending platforms, decentralized insurance, and so on. In terms of DeFi categories, 74% of people said that they've heard of decentralized exchanges, 73% have heard of Ethereum wallets, decentralized lending has about 54%, and insurance has about 9%. We broke down the brands of the companies that are working on each of these categories, and we asked them if you heard of any of these brands in the past 3 months. And one of the things that in terms of DEX is that 78% of people said that they've heard of Kyber Network in the past 3 months. 60% of people said they've heard of Uniswap, Bancor, and DYDX. In terms of Ethereum wallet, MetaMask is by far the most popular wallet. 99% of people have heard of MetaMask. Argent is this new wallet that only 13% of people use. So it shows that MetaMask is by far the most popular wallet. In terms of decentralized lending platform, Maker is by far the most popular platform, followed by Compound at 46%, InstaDebt at 29%, and BZX. In terms of insurance, 84% of people heard of Nexus Mutual and 46% for OFIN. And some of the popular DeFi dApps include Augur, XDAI, Pool Together Token Sets, and Sablier. Okay. So the next slide is basically 54% of crypto users who are familiar with DeFi said that they would go completely bankless. We're not trusting the banking system is the main reason. So given a chance, will you stop using banks entirely? Those who said they know what DeFi is, 54% said, yeah, definitely they would stop using the banks. 37% said maybe for some transactions, and the rest said they don't know. And we asked them why would you be willing to go bankless completely? A huge 31% of those said that they don't trust the banking system. Then they said DeFi is more efficient and convenient, and they're more comfortable because they have full ownership of funds and some other things like investment opportunity and bank fees. Those that heard about it but don't know what it is, only 28% say they will go completely bankless. But what's surprising as well is those who have never heard of DeFi said they'll go completely bankless as well. So I've no idea how they're going to do that. But yeah, so for those who said that maybe they use DeFi for some transactions, ask them why not completely bankless. That's because they said they are somewhat reliant on bank at this point in time. DeFi is still way too early at this point in time. DeFi is a bit inefficient, and it's unsecured, and maybe in the future, DeFi. Let's see what's the next slide. So yeah, and then we also asked them about their sentiment about the crypto market despite its global economic indicators being negative. So we asked them, of the 638 out of 694 participants, 91% of these traders do their own research before trading. And we asked them, how often do you do your research? 60% say they do it once a day, 34% once a week, and 7% once a month. And we asked them how long does it take them to do the research. Most of them spend roughly around 30 minutes to an hour. Some of them spend 20% spend between 1 to 2 hours. 30% spend more than 2 hours doing the research before participating, which is quite interesting because this is actually quite a large amount of time to be spending on devoting, which makes sense if you're spending money into crypto or investing your money in crypto. And we asked them what do they feel about the next 12 months. Most of them are actually quite positive for crypto market. 39% said they feel extremely good. 27% said they're good. 21% is neutral on the crypto market. But on a global economy, they're not so positive instead. Not that many have extremely good response and so on. But so what is interesting is 60% of them say COVID-19 does not affect how they trade, and I think that's pretty true. If you look at the chart since then, April and May price has pretty much gone up, and yeah, no, doesn't really affect the market since then. Yeah, one plugin. So we at CoinGecko are interested in DeFi. We wrote a book called How to DeFi. This book, if you're interested, is 212 pages and has 26,000 words. So basically it goes into DeFi and talks about every single category, and has a step-by-step guide on every single popular DeFi dApps. For example, it looks into synthetics, teaches you how to use synthetics, how to use token sets, how to use pool together. If you don't know what this is probably the best book for you to read or to know about DeFi, so you can get it from CoinGecko's site. So yeah, that was my last slide on for this presentation today. If you're interested, you can follow me or at Bobby Yong or at CoinGecko on Twitter. And if you're interested in getting a full copy of this report, it's available on the CoinGecko website as well. Yeah, thank you very much. Let's see. I hand it back to Elena. Yep.
Yeah, Bobby, thank you a lot for your presentation. We have a few questions to you from the audience. And first of the questions will be from Bogdan from CryptoTP. So he's asking, if you consider in statistics for the wallets, only desktop wallets, he assumes that MetaMask, for example, has a mobile version as well, and that's not like that popular. If our statistics didn't consider any mobile wallets, like why? And he assumes that mobile wallets are more popular than desktop ones.
Yeah, I think got a good point. Probably should have expanded the survey results, and maybe for next survey we'll put in more choices like Trust Wallet and a few other wallet options, Coinbase Wallet, and to see what are the results. So yeah, I think you got a point. MetaMask is mainly a desktop wallet, and in terms of mobile wallet, there's a lot of other options which we did not put in our survey, and something for us to improve for the next survey.
Okay. Then another question to you is regarding the part about our developing and developed countries. I think it's very interesting to understand what actually drive people into a crypto market. For example, when we talk about the Latin American market in the crisis conditions, right, we can see the increase in volume usually in the crypto market because, as you already mentioned, that some people prefer cryptocurrencies to gold because they think that's actually a tool that they can use as a saving. But we still have the daily volatility that is really large, and people still prefer because of their national currencies, right, that are not that stable as these countries. So for example, Bitcoin sometimes is still not that volatile, and they can go there. Then also the other question, oh sorry, I'm getting the echo, just a moment.
Hello.
Can you hear me better?
Oh yeah, it's much better.
It's much better like this.
Yeah, I think my AirPods sometimes. Sorry. So let me just briefly say again. So I'm very curious about the difference between developed and developing countries. What drive people to go into crypto market during the crisis time? Is, for example, if I can experience that volume is increasing in, for example, Latin American countries, because their currencies in many countries here are unstable and people prefer to switch into something safe. What is happening in developed markets? How is this how's it going during the crisis time?
Yeah,
I think
I'm hearing echo on my side now. Okay, so I think what is interesting is that in terms of retail market, one thing I can say is that from CoinGecko stats, we don't see that many new retail people coming into the market. And from our previous experience, we normally retail market only comes in when Bitcoin hits its all-time high. Because if you think about it, Bitcoin was trading at $14,000 late last year, which is, if you compare to the all-time high of close to $20,000, it's actually pretty high, $14,000, and it was nowhere near as high before that. But we didn't see any new retail users coming in during that time. And if you look at the current crisis as well, we don't see any new retail users as well, because one of the things that's the largest data aggregator on the world, we know that when there's a huge influx of retail users coming in, we'll see a huge increase in traffic, and that's not what we're seeing this year. It's the same if you look at other indicators, such as people looking for buy Bitcoin keywords on Google. You don't see an increase in search trend. If you look at the number of new followers following exchanges like Binance, Coinbase, you don't see a huge increase compared to the 2017, 2018 levels. So there's definitely no increase in retail users, new retail users coming in from the pandemic. What I think is happening is that a lot of people, existing users, are being recycled from one platform to other platforms, using from one exchange to another exchange. And there's a lot of talks during the pandemic where the US issued stimulus checks to people, and I think it was $1,000 or $2,000. I can't remember exactly, but what Coinbase observed was that there was an equivalent amount, a lot of purchase similar to the stimulus check size, which sort of indicates that people are receiving money from the US government and taking that money to buy Bitcoin entirely and stock up on their value. So from the developed market, I guess that's sort of the only indicator you see people spending stimulus checks on Bitcoin. From the developing markets, I guess it's still the same. People are buying in as a hedge against declining currencies and trying to see how they can store value and not lose them through inflation and so on.
Okay, yes, thank you for this, for answering this question. And a little bit more like statistics related questions. When you were showing the correlation between Bitcoin and the gold, I would like to ask, how was the data set? What was the R-squares there, if you know this information? Like how this actually the data variables were fitting in total? How representative was?
I don't really have the number detail. My analyst did the number crunching and prepared this slide for me. So, but yeah, I mean, in terms of the correlation was was quite closely correlated over a long period of time. But yeah, 0.6 over 5 years and 0.4 over 2 years. But that's the only numbers I have at this point in time. Data sourced from Yahoo Finance to get the gold price.
So yeah, for this presentation, do you usually put any reports on CoinGecko website, these kind of reports, or you use them more for the presentations? If it will be possible for maybe users to access them later on or have deeper information, maybe you can share the link here so everyone can read after.
Yeah, sure. Let me get a link for you guys. Just give me a moment. It's basically on the CoinGecko website. There's a link to all our reports. So just give me a moment. Yeah, found the link. Okay, let me just put it to this link here. Okay, yeah, so basically it's reports.coingecko.com/all-reports, and basically you'll be able to find the link to the Q1 report and download the full report. And if you are interested in some of the previous reports, you can get them all there as well. Yeah. This is the link to the Q1, exactly, the Q1 report.
Okay, great.
Yeah, Chris, I think it's a very great presentation and a lot of content. So I'm sure that everyone will be interested to actually read and go deeper in the topic. Of course, during this time, like people are seeing more interested in cryptocurrency and how the trend is actually changing. Because we like kept having like many webinars about how COVID affected crypto. And maybe just like for the final like highlight, just to wrap up the session, maybe you have something like kind of like a conclusion for like as you feel how the COVID actually influenced the crypto market in total, just like the final word.
Yeah, so I think COVID was kind of like an external shock, was black swan event, and it sort of impacted Bitcoin very rapidly. I think everybody was a rush towards liquidity. Anything that can be liquidated is liquidated, and Bitcoin was viewed as like the riskiest asset in terms of compared to traditional market, and got sold off insanely much, down 40%. But I think what is interesting is after the COVID crash, it sort of rallied up towards the Bitcoin halving sometime in May, and it's gained back all its losses. And it's going to be hard, not so sure where the price will move up or down in the next few months. But I think in the long-term horizon, 2020, 2021 will be a very interesting year because it's a lot of I think it's going to hit an all-time high again. Question is how high will it go and when will it be? It's something to be watched out, to take a look out for, because it's definitely going to move up, and a lot of interest, retail interest, institutional interest, especially institutional interest coming in. So we don't know when, whether it be this year, next year, but it's something that will be something to watch out for very closely.
Yeah, definitely. Thank you a lot for presentation. I think if anyone have like a last question, you can ask in the Q&A session. Otherwise, we can wrap this session, and thank you a lot for joining us today. And feel free to also explore the platform, join the video chats, and talk to other companies that attending Blockconf Digital.
All right, thank you very much.
All right, thank you very much for having me.
Thank you.